Hey, finance folk! Welcome to the EU Finance Podcast. My name is Aidas Palubinskas, and I am your host. I'm on a field trip today to Luxembourg. Luxembourg is home to the European Court of Justice, the European Court of Auditors, and a host of other EU bodies and organizations. Among them is the ESM, the European Stability Mechanism. What? You haven't heard of it? Well, you should have, and now is your chance to learn more about it. So, I decided to invite myself to the ESM and chat with the ESM Secretary General, Nicola Giammarioli. He's in charge of corporate governance and internal policies, policy strategy, and institutional relations and communications. So, who better to talk to find out what the ESM is all about? Nicola, welcome to the podcast.
Thank you very much, Aidas.
It's a little weird saying welcome to the podcast when I'm in your studio. But let's jump right into it. What exactly is the European Stability Mechanism, and why should someone who's not a finance nerd or deep into EU finance or into EU politics, why should we care about it?
Yeah, so the European Stability Mechanism, ESM, is an international financial institution. It was established in 2012 by the Euro area member. That time 17, now we are 20 members because 3 new countries join. Most likely another country will join next year, so we're gonna be 21. So the institution was created to provide financial assistance to members in trouble, having financial needs and not finding enough resources in the financial markets. This is, of course, it looks pretty technical, and you ask me why people should care. To make it simple, people should care as they care having firefighters in their communities. Firefighters, most of the time, they don't do anything or they prepare, but if there's a fire in a house, they immediately intervene. So the spirit of this institution is to intervene when there is a fire. When financial crisis erupts, you have an institution who is taking care by providing financial assistance to members in need.
Now, you mentioned 2012, but if I remember correctly, the 2008 American financial crisis, which then spread across the Atlantic to us, isn't that when I always thought the ESM was born during that crisis, and that's sort of what brought me to the original idea about is that you already alluded to is to help member states that are in trouble. Let's go back to 2008.
Yeah, let's go back to 2008. You correctly mentioned the global financial crisis that started in the US, the Lehman Brothers collapse, to make it easier. Then this crisis spread into the Euro area, into Europe in 2010. At that time, there was no institution, Europe was not prepared to deal with a sovereign crisis because the euro was considered to be solid and protected and no sovereign crisis anymore. So at that time, I would say policymakers had to improvise, and the first country in trouble was Greece. And to help Greece, the IMF was called in, the International Monetary Fund, and member states provide bilateral loan to Greece without any framework. At the same time, they realized that there was a missing piece in the European Monetary Union architecture, and firefighters had to be created. The first setup was a temporary fund, what we call the EFSF, which was the predecessor of the ESM, was created in 2010. And actually, the first loan provided by the EFSF was not to Greece, because, as I said, Greece was utilizing IMF and bilateral loan. But the first loan of the EFSF was to Ireland, and then to Portugal. And then 2 years later, in 2012, policymakers decided to make this fund permanent and to create a permanent institution, and the institution is the ESM. So there has been an evolution, as you correctly mentioned, starting from the global financial crisis in the US into Europe in the creation of a temporary fund and then a permanent institution, which is the ESM.
So there is a continuity in between the
FSS
and the ESM.
Yes.
Got it. Okay. One of my favorite questions to ask about policies or actions that the European Union does or creates is who's paying for it. So who pays for the ESM?
I mean, the simple answer is that the ESM pays for itself, but I think it's worth going into details of how financially is structured the ESM. So the member states, the Euro area member states, provide capital to the ESM. They are shareholders. And this capital is invested and generates funds. And this can be utilized also to pay for the existence of
When you say it generates funds, you mean that it's generating income?
Income. It's generating
understood.
income. We have just had the annual meeting of the Board of Governors approving the financial result of last year. That capital generated only last year 1.8 billion euro. And this is so the institution is making money, quote unquote, so it's not making losses. At the same time, the loan that we provided to member states carry an interest rate which is very low. At the same time, a very small fee that is utilized to pay the structure, the existence of the ESM, to pay salaries and the organization. So that's why it's paid by itself. It's not member states providing financing to us every year, but having a setup, the institution is autonomous in generating the income to maintain the structure.
Well, that's good because you mentioned that the money is generated and it not only supports the money that you would potentially lend out, but it also supports the institution itself. Yeah. Because one of the questions that I was going to ask was, what do you guys do during the good times? You've sort of already alluded to it by saying that you're the firemen that are, keeping the hoses dry, ready to go with the sirens when there would be a crisis. So is that what you guys do? You guys are just always on call, ready to go? Or is there more involved in that?
I mean, that's the core, you are right, but there's more. First, bear in mind that when we were creating not to be prepared for a crisis. We were created during a crisis. So we had to do everything very quick, and then we didn't spend enough time to build up the institutional dysfunction. So we have been utilizing the peacetime also to build up a solid institution with all the functions, to be audited, to be assessed by our member states. So this was part of our activities. And of course, as you mentioned, as firefighter, we need to be prepared for crisis to come, but not only to be prepared, try to detect the signals that a crisis is coming and to flag to our members, look, there are risks here or there. It's better you address the risk than eventually the crisis erupting and coming to us. So there is a lot of, let's call risk monitoring. So we build up capacities to detect risks. Also, the fact that we are in the financial markets is not just doing the analysis that other institutions are doing. As market participants, we can feel where the markets are, how the perception of risk is. And nowadays, for example, with all the turmoil linked to tariffs and to new US administration policy, what this means for Europe, what kind of risk these policies bring to Europe, and to flag those risks to our masters. And you might be aware that our managing director always attend the Eurogroup meetings once a month in Brussels, and this is the body where we can flag those risks to finance ministers of the Euro area.
Okay, so you're continuing the analogy of the firefighters. So you're doing fire prevention, education about fire prevention, and making sure that there are enough watchtowers to make sure that we can see where there's smoke coming out of the forest and get the firefighters there early enough to prevent problems. So after the world financial crisis, the banking union capitalized the banks, and we put into place all sorts of mechanisms to prevent crisis in the future. It seems that we've got all sorts of stuff in place that is going to make it impossible for that same crisis to happen. So let's go back to the past, because what I'm looking for is something that could illustrate in the real world rather than using the firefighter analogy. An example of where the ESM really made a difference.
So we provided financial assistance to 5 countries, Ireland, Portugal, Spain, Cyprus, and Greece. And we made a difference in those countries because with our loans, we allowed those countries to tackle the root causes of the financial crisis and to do reforms. And now these reforms are paying off. If you look at the latest statistics, these 5 countries are the best performing countries in the Euro area, in the EU, in terms of growth, in terms of job creation. So this is where we really made a difference. And of course, I don't wish other countries to have a crisis to do reform. It would be good that countries tackle problems before we come into play. But need be, we come into play and we can make a difference.
Got it. Okay, let's go back to absolute basics. European Stability Mechanism, financial stability is in my workplace's name as well. What does financial stability mean for everyday people? I get it, what it means in banking and in the really big scheme of things. But what does financial stability mean for like normal everyday people, students, small business owners, families?
Yeah, financial stability is a precondition for countries to be well functioning and to grow. And this is very important. Let's put an example, small businesses. Small business need financing for their investment. They need to access cheap financing, most likely with banks, but possibly with capital markets. And without financial stability, they cannot have this access. Families that have savings, they need to be sure their savings are safe in the banks, or they want a mortgage to buy a house. They need to go to the bank and have a mortgage with reasonable rates, predictable and stable. Students, I've kids myself, they are currently in university. They get loans from banks to study. Without financial stability, all of this is not possible. States need to finance the welfare state, which means pensions, healthcare, education. Without financial stability, they cannot have access to markets and they cannot finance their budget. So financial stability, even if it's a sort of abstract concept, is very important for the daily life of all the citizens, being them workers, companies, students.
So it's basically the foundation that our economy and our finances are built on, where it's not gonna move around like in an earthquake, but rather it's going to be something that can support us. And we know that it's going to be the same thing the next day.
Yeah. This is, nowadays we tend to live on a daily basis, but businesses needs a long-term perspective, needs stability over the long term. Otherwise they would not put at risk money, their own money, or they would not ask money from the capital markets of the bank. That's why these are the foundation for and healthy economic life in our societies.
Speaking of the long term, and this is going to be my last question, it's actually one of my favorite questions. Rarely does it have a satisfying answer when we're talking about policy initiatives coming from the Commission, because usually it's like a year or two down the line when it's going to happen. But I'm hoping that I'm going to get a better answer here. What's in the future for the ESM?
So the future, we try to get lessons from our first 12, 13 years of activities. And we learned that prevention is better than addressing crises when they're up. So we are working hard to make sure that our preventive role is boosted. We have a conversation with our member states about our toolkit, so the way we operate, and how to make this toolkit fit for purpose, addressing the challenges of the future. So we started off this conversation talking about the financial crisis, which was of the past. In the future, we have other challenges. We have climate change, we have aging population, geopolitical risk. How can we best utilize what we have, and in our case, the ESM, to address those risks? So this is very important. And I see in the future of the ESM more and more addressing the risks of the future and not just be linked to what we did in the past.
Nicola, I am so glad that I came to Luxembourg today, not only because Luxembourg is a wonderful place to come to, but I learned a lot. And I especially enjoyed the firefighter analogy, because it goes to show that European institutions are indeed making sure that the stability that is so important for all of us is maintained, so that we can keep on working, keep on growing, keep on providing for our families. So thank you for educating me on that. And thank you for having me here.
It was a great pleasure for me to meet you.
Okay, here's my take on this. In a nutshell, the ESM is an intergovernmental organization created by Euro area countries to avoid and overcome financial crises and to maintain long-term financial stability and prosperity. The ESM acts as a lender of last resort for its members when they are unable to refinance their government debt in financial markets at sustainable rates. The ESM is probably most famous for the 295 billion euro in loans to Ireland, Portugal, Greece, Spain, and Cyprus, who needed help when the USA financial crisis of 2008 spread to Europe. An important thing to know is that ESM loans are financed through the issuance of bonds and bills. EU taxpayer money is never used for lending to beneficiary countries. The ESM's role will expand under the ESM Treaty, but it's safe to say that its core mission to help maintain financial stability in the EU remains the same. That's all for this time. Please like and subscribe, leave a pleasant comment, tell your friends about the pod, and until next time, bye!